If you guys want to know how I'm able to snipe entries on any time frame and achieve a consistent 70 to 80% win rate, then keep watching this video. And if you can't sit through a 7 to 10 minute video on improving your trading, then it's probably not for you, because this strategy will take time and it does take practice, right? You have to be consistent with it. But if you get the hang of this, you will become a consistently profitable trader. This is how I was able to snipe this entry here on ETH, as well as many other entries, including a Solana short and a Bitcoin short. If you haven't guessed already, I'm talking about the Golden Pocket strategy. However, it's not as simple as just drawing a Golden Pocket and looking for a long position, right? You need to know exactly when to take the trade at that Golden Pocket. And I'm going to break down exactly what to look for and the confluences that I like to see. Now, before we get into anything, if you guys want the TradingView indicators that I use to help me, be sure to click the first link in the description below. We have multi-time frame support and resistance, as well as our unique easy oscillator with real-time divergences, buy and sell dots, as well as buy and sell signals. Now, these apply to any time frame. However, obviously levels on a higher time frame are going to be more respected than those on a lower time frame. And you guys can make a lot of money simply by swing trading, all right? You don't necessarily need to be scalping. So, get that mindset out of your head that you need to be on a 5-minute time frame. That is absolutely not the case. And in most cases that I've seen, when people actually go to a higher time frame, they start becoming profitable, right? Funny how that works. But the first thing that I'll look for, and I don't look for this every time, but this is definitely a great confluence to have, is a change of character. Now, this is technically a smart money concept, right? But really what you're looking for is a shift in market structure. So you can see that we have this pump up here on ETH USDT to around 2100, right? As soon as I saw that we had broken these lows right here, you can see that we had broken those lows and created a lower low. That means that market structure has shifted, right? We're now going to be looking for short positions. And that is when you can get your Golden Pocket tool out and draw it from the recent swing high to that previous swing low. We also had a Golden Pocket here, even on a lower time frame. If we draw it from this swing high to this swing low, you can see we tapped that Golden Pocket and we dropped. So identifying a change of character or identifying when market structure has shifted is crucial for using this strategy, because it allows you to get that short entry on the last pump up before price eventually drops. Now, it could be the same thing with a long position, right? Let's say I'm in a downtrend, right, making these lows, and I get that change of character, right, where we had broken that previous high, meaning that we're now in a bullish market structure. That's when I'll draw the fib from the swing low to the swing high and then look for a long position right here at that Golden Pocket. So in essence, that is how this strategy works. There are other confluences you can use as well. All right, the second is going to be using multi-time frame support and resistance levels. I'm on the 4-hour time frame and I'm using 12-hour support and resistance levels. I do this by using Easy SR V2. This is part of the Easy Algo bundle. If you want to use a strategy without using Easy Algo, that's fine. Just be sure that you know exactly where to draw the support and resistance levels, because there is a methodology behind it and you don't want to be drawing these levels in the wrong areas. Essentially what you're looking for is confluence with a multi-time frame support or resistance level and a Golden Pocket, right? Extremely, extremely valuable. And if you want to take the guesswork out of finding these levels for yourselves, you can use Easy Algo, which is what I use. All right, so multi-time frame support and resistance is a great second confluence. A third confluence we can use is the volume profile. Now, this is a free TradingView tool. I like to go for the fixed range volume profile, so you can draw it from that swing high to that swing low. In this case, the point of control was not near our entry, but in some cases it will be, and that can be another great piece of added confluence that I'll use at times. All right, the fourth piece of confluence I'll use is a swing failure pattern, right? This is something that I've been talking about for almost a year now on YouTube. Pretty much since I started this community, I've been talking about swing failure patterns, right? And now people are coming around to it on YouTube. Now you're hearing the term liquidity grab, right? This is not a new concept, guys. Essentially what you're looking for is a candlestick or area on the chart where there is liquidity. So there are a few different ways to identify these levels. Now, the reason that I'm looking at this candlestick right here is that we had this downtrend, right? We had this indecision candle before making this move down. That tells me that there are still sellers in this area waiting to get filled. All right, the fifth piece of confluence I'd like to use is a fair value gap. Now, I'm not going to get into fair value gaps in this video, but essentially a fair value gap is when you have this very strong, in this case, bearish candle with volume. And a fair value gap includes 3 candles. So it'll go from this candle wick to this candle wick. Now, there are some free fair value gap indicators. The one by Nephew Sam is pretty good, right? It shows a fair value gap for you. There are a few different ways to enter the fair value gap. Some people like to enter right in the middle of the box. What I'll do is I'll actually enter right at the bottom, especially in a situation like this where we know that there's liquidity in the area, there's a golden pocket, and there's a resistance level. There is just so much confluence telling you that price is going to get rejected from this level. Now, it's important to keep in mind that when you're looking for swing failure patterns, you want to be on the Japanese candles, because when you're on Heikin Ashi, you obviously can't see the true value. So you can't really see those candle wicks, but if you go to Japanese, you'll be able to see them. Now, if you want to enter based on a limit order in a situation like this, you absolutely can. In this case, I'd recommend putting your stop loss at the top of that fair value gap, somewhere around there, and then you can dollar cost average your position if you choose to. If you don't want to set a limit order, you can wait for a bearish reaction, right? In this case, we had an extremely bearish candle here. If you don't know how to identify bullish and bearish candles, visit the education section in our Discord, and you can easily identify what a bearish candle looks like. I mean, it's a red candle. It has this long wick at the top, indicating that bulls tried to push the price past this resistance, but the bears were just too strong and pushed it back down. That is also referred to as a successful swing failure pattern. So if you want to enter there, you could. Another thing you could do for entry is use the easy algo buy and sell signals on the Japanese candles. And you can see we had a sell signal here on easy algo as price was failing that level. So that could also be your entry. And you can put your stop loss above this swing high. Now keep in mind that the buy and sell signals on easy algo are meant to be used on Heikin Ashi candles, because that is a trend trading indicator. So you want to get the average price as opposed to the true value. All right, guys, that is how I was able to achieve a 100% win rate last week. I think I went 12 for 12 in my personal account. I don't use all these confluences. Sometimes there's other context involved and each trade is different. But if you get 3 or 4 of these confluences, guys, feel free to enter the trade. And I think you'll be surprised with your results, right? If you're taking profit accordingly, if you're dollar cost averaging your positions, and you're waiting for a majority of these confluences to line up, you'll be very, very successful in trading. So if you guys got value, be sure to leave a like, subscribe to the channel for more trading content, and join the Discord if you haven't already. First link in the description below. That's it for me. I'll see you guys next video.